Welcome to Market Matters. I'm Khoo Chong and I'm with Charlotte Chong this evening. Now, company in the news is Leong Bhd. They, along with their Islamic bank associates, Leong Islamic Bank, they've announced the mutual separation scheme.
Well, in an article in a press release today, CEO Tan Kong Kun actually said that these will strengthen the organization by enhancing productivity and efficiency. But we all know that it happens all the time for banks.
Well, this is the second time in 4 years, right? Because in 2011 they did also a VSS. But the thing is, Leong and Leong Islamic are the latest in a whole series of Malaysian banks that have announced VSSs in the last 1 year. Standard Chartered did it, RHB has done it, CIMB has done it, MBSB has done it, no, not MBSB, Muamalat has done it. So basically it's a sign of the times, because although each of their own banks have their own specific reasons for doing so, it's a sign of a slowing economy.
So what happened is this year we don't really see big IPOs. We probably see about 7 8 IPOs in the pipeline. And basically what happened is they don't really get much business from the market. And we also see slower activities in the market, like Bank Negara Malaysia have been tightening the lending rates and all that. So that's why everything has been slowing down, and that's why I can see why all these banks, they want to lay off their staff.
Yeah, it's tough times, right? Because as you know, banks make money from two main sources, right? Interest income and fee income. Interest income, mortgages, or basically house loans and car loans. If you're not confident, Charlotte, are you going to be buying a car? No. If you're not confident, are you going to be buying a property?
A house.
No, right? And if you even wanted to, maybe Bank Negara won't even give you a loan because they want to try and sap this property bubble that was brewing about 2 or 3 years ago. On the deal side, as you say, right, IPOs have been slowing. We've only seen about 7 or 8 IPOs this year. Bond issuances have sunk as well. So you can imagine, because banks are the front line of economic activity. So once the economic activity slows down, so too do banks.
So actually, when I look at the announcement closely, the VSS payment formula is actually based on a VSS multiple and then ranges from 1.4 to 1.6. And they multiply by the length of service. Well, basically, they will get about 1,000 reimbursable for a period of 6 months from the bank.
That's right. So, of course, I just want to reiterate the share price. Leong Bank actually closed 0.4% lower to 14.24, which is not a big drop given the fact that, in fact, usually when you announce a cost reduction exercise, which is what a VSS is, share prices do rise. And we've got to offer some perspective here, right? Because banks all the time right-size their staff, right? They tend to hire quick, they tend to cull quick as well. And this is a VSS, so they can always, at the end of the day, if you want to resign, you can put in your hat, but I might be able to say, sorry, Charlotte, you're too valuable to the bank. We're not going to let you go.
Well, just a quick look on the financial results in fourth quarter ended June 2015 this year. Profit actually up 14.4% to 614.9 million. Revenue unchanged at 1 billion ringgit.
Okay, let's move on to inside the Malaysia stock of the day. It's actually Far East Bhd. Now, of course, they are a Pahang-based plantation company. They've got a land bank of about 21,239 hectares. They are a very small upstream player. But of course, inside Asia, they like boring stocks. They like cash-rich stocks. And this is a compliment, Charlotte, right? It's very Warren Buffettish, right? Cash-rich, good dividends, well-managed, small, nimble, and bang, right?
So why Insider Asia like this stock is because it trades relatively inexpensive at PE ratio of 14.52 and 0.92 times book. Company also sits in strong net cash position of 243.91 million ringgit or 1.73 per share. This equates to 23.23% of its 1.05 billion valuation.
That's right. So it's got cash rich, it's reasonably cheap, 14.5 times earnings. They paid, just 46% of net profits back to shareholders. Insider Asia reckons the recent share price weakness gives investors a chance to get into the stock, while there's still a few more floors to rise for the lift.
Actually, what Nadia actually dig deeper on their annual report just now, and it gives dividend yield of 3.75% in FY14, which is higher than fixed deposit. I think it's fairly quite a positive.
And here's the icing on the cake, if you are so inclined, right? The age profile of their trees is is quite young. Only 28% of their trees are old, which is more than 19 years, while 41% are in their prime, and the remaining 31% is immature. So this is a nice age profile. Everybody likes young coconuts, right? These are young palm oil trees.
And planting policy is anything over 25 years, so I think they have more time before the trees get older. And going forward, actually, the company has committed 40 million ringgit for buying land bank.
Yeah, I see. So Insider Asia trademark characteristics, they're cheap, they're cash rich, they've got young trees. What's the not like, right? So let's wrap up what we had earlier in terms of what we had for the companies. Leong Bank and Leong Islamic Bhd are implementing a mutual separation scheme to basically reduce costs and increase operational efficiency. It's going to be offered to all staff, all permanent staff. It's the second VSS in the last 4 years. As regards Far East, the three things that matter is that they're cash rich and they've got a good dividend payout, they've got very young trees, and there's room for share price to grow. So thank you for listening to us and watching us on Market Matters. If you want more, go to the newspaper or go to theedgemarkets.com. The weekly newspaper is also on newsstands. Catch us and catch more content on those platforms.